Did you realize that there will be a massive price explosion due to the anticipated split of the Tesla stock? The price of Tesla shares is currently approximately $700, notwithstanding the decline. It's noteworthy to consider that there's a good possibility this may rise following the separation. To learn more about this, stay watching and tuning in. The current price of Tesla's shares is 752.8, up 245 from yesterday. This still pales in comparison to what experts and investors have valued the top stocks of manufacturers of electric vehicles at. Given the state of the economy and unanticipated international problems, the anticipated price increase following the split may or may not match the stated valuations. Nobody is able to say for sure. Let's discover why the Tesla stock split will result in a massive price explosion in today's video. The public announcement of the 3-for-1 stock split generated a lot of attention online and in news headlines. Tesla provided more details about its plans for the August 4, 2022 annual stockholders meeting in a 14SX filing. Tesla announced its plans to split its common stock in a 3-for-1 ratio in the 14F filing, along with a number of agenda items. And this will triple the number of shares available and divide the price by 1/3 on the day of the stock split. This action only makes more common shares of a publicly traded company available while lowering the price to make shares more accessible for investors. It has no effect on the firm's valuation. Splitting stocks doesn't alter a company's worth. Investors in a firm that splits its stock into 2 shares for one, say at $100 a share, will end up with 2 stocks valued at $50 each, meaning that the value of their 2 new shares is equal to the value of their original one. However, according to Retails, which cited research from Bank of America, businesses that divide their stocks frequently do better than the market. That can be the result of investors purchasing stock in a company following a split on the belief that the shares are now more reasonably priced. Stock splits are a common strategy used by companies whose shares have reached exorbitant prices, thousands or even thousands of dollars per share, in an effort to increase accessibility for ordinary investors. According to Tesla, the company's board of directors decided to divide the company's common stock 3-for-1, meaning that if you already possess 1 share of Tesla, you will receive 2 more. They claim that this action will increase the availability of Tesla stock ownership for both investors and employees. We want to make sure all employees, no matter when they join, have access to the same advantages, the paperwork stated. We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity. In contrast to other manufacturers, we provide equity to all of our workers. According to Tesla's filing, the authorized share change is primarily intended to enable a stock dividend in the form of a 3-for-1 split of our common shares. They went on to say that the acceptance of the authorized shares amendment by stockholders is a prerequisite for the stock split. The business commented on the suggested stock split. Our success depends on attracting and retaining excellent talent, and that highly competitive compensation packages offering every employee an option to receive equity help Tesla to do that. Given the significant interest that retail investors have shown in our stock, we think that the stock split will also increase retail shareholders' access to our common stock. This year's proposed stock split would be the company's second in less than 2 years if it goes through. Recall that on August 11, 2020, Tesla announced a stock split of 5-for-1 with effect from August 31 of that same year. Prior to the split, each share was valued at $22.1340, but following the split, shares were trading at $442.68. The announcement of the stock split caused Tesla's stock price to soar to a record high of $2,000 per share. As a result of the split, the price per share was reset to approximately $460. With a valuation of approximately $430 billion at the time, the share price of Tesla was trading at about $1,300. What do you think about the planned split of the Tesla stock? Post your ideas in the space provided for comments below. In the midst of multiple problems that have impacted Tesla's production, Barclays, a British international universal bank that operates as 2 divisions, Barclays UK and Barclays International, is increasing its price objective on the company. Barclays is well known for being a significant international provider of financial services, specializing in wealth management, corporate and investment banking, credit cards, and retail banking. It is increasing its price objective by 14% for the top EV business. According to this, Q2 output is probably going to be about 256,000. Similar to Barclays, MUB has increased its target price citing strong margin momentum and a sizable order backlog. UBS Group AG is a global provider of investment banking and financial services operating in more than 50 countries. They continue to project a 50 annual increase with a 1100 price objective. They are more likely to adopt a year-long perspective as opposed to a quarter-by-quarter one. Additionally, they anticipate that Tesla's better growth and profitability will come from its semiconductor software, batteries, and vertical integration. Furthermore, they contend that since Tesla has its own battery manufacturing facilities and building capabilities, the business is in a unique position to achieve greater margins with its batteries and truly deliver, given that batteries represent the largest bottleneck for the EV market. In their bull case scenario, UBS is so certain that Tesla can achieve gross margins as high as 34.7, which is quite optimistic rather than the 30 they are now sitting at without tax credits. With the increased buy rating, UBS now believes there is over 50 further upside for the electric car company's shares. Many analysts and investors are constantly searching for stocks that are performing well, and most still view Tesla as a wise investment, even in light of its recent stock market performance. Since the stock market, including Tesla's, is so unpredictable, investors typically watch the stock's moves before making a purchase. Financial expert Robert Johnson of Creighton University's Heider College of Business said splits are generally well received by investors as an indication that the company they are involved in is doing well. While it may be tempting to invest in an expensive stock when it is now much less expensive to do so, enthusiastic investors should ensure that the stock is consistent with their overall investment objectives. However, unless it has long been a component of your portfolio objectives, one shouldn't jump all in just to possess Tesla stock, for example. According to Stivers, if the ordinary investor was drawn to Amazon prior to the split, now would be a good time to invest because the returns are higher. But only if it's a component of a well-diversified portfolio should you do it. It's not simple to become a millionaire in the stock market, but it is achievable. To make a lot of money with investments, you don't have to be affluent, but you do need the appropriate plan. The secret to being wealthy in the stock market is strategy. Financial industry insiders are aware that stock prices fluctuate greatly. Since the stock market is just the total worth of all the stocks that investors own, it too experiences ups and downs. Since 1928, the market has had its largest one-year gain of 52.6 and its biggest one-year 43.8. Psi was the law lost, but the market has recovered 10 on average. The average return on 10-year government bonds is 4.8. By contrast, the annual percentage yield on the typical savings account is currently 0.9. For this reason, investing rather than just saving can help investors reach their objectives more quickly. It is indisputable that Tesla continues to lead the EV market despite a plethora of problems and obstacles. Many investors, even those with years of expertise in the financial sector, are confident that the EV company has a great deal of potential and can succeed in the future much beyond expectations. Of all, nothing involving the stock market is completely certain. However, the options are virtually limitless. Check out our other videos on our channel for more information about Tesla stocks.